Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you're getting some good trades. Today we saw a dramatic move in the euro dollar, also the pound dollar, the Aussie dollar, and the dollar Swiss after Mario Draghi, the president of the ECB, came out and made a comment that within our mandate, the ECB is ready to do whatever it takes to preserve the euro. Well, this is more than just a band-aid on the marketplace for all those holding euro shorts. This was a triage move by Mario Draghi, but you know, when you talk the talk, you got to walk the walk, and so we've seen little action up to this point from the ECB, but there's some consideration that the ECB will step in with some more bond buying program. However, interesting today is that Citibank upped its target of a Greece exit to 90% within the 12 to 18 month period. So we have on one hand Mario Draghi saying we're going to do whatever it takes to preserve the euro, and on the other hand, those really in the market are seeing the potential for a collapse of the euro, at least one or two countries exiting the euro. Well, I'm just a simple little trader looking at my chart, and I see a dramatic move of over 200 pips on the euro when it has a 5-day average daily range of only 105. Well, by the time I got settled in my seat this morning to trade during the U.S. session, it had made most of the move to the upside. As a matter of fact, when I stepped in to the market this morning, the euro was already up around that 2260 to 2270 range. So I placed a short in this area looking for the market to go down when it showed a potential double top right here, and we started seeing the Traders Dynamic Index roll back over. And then the market pushed up higher. I went through the process of adding to my position, looking for a higher top potentially, and then a roll back over as the U.S. stock session came to life. Well, sure enough, the U.S. stock session opened up. Stocks made a dramatic move up. So with rising equities, we would see a lower dollar and therefore a higher euro dollar, a higher pound, higher Aussie dollar, so higher in the risk on currencies. So I'm sitting here with a couple of shorts in the euro dollar up fairly high, and I'm thinking to myself, what has happened fundamentally? Has anything changed? No. Has Mario Draghi come out before, as well as other ECB members come out before and made statements? A lot of talk the talk, but no walk the walk, no action behind it? Yeah. Have I seen moves like this before? Thinking to myself, okay, the market has bought the rumor, now let's just wait and sell the fact. The fact of the matter is, there hasn't really been anything changed. And if Mario Draghi is looking to buy more bonds, well, we're going to have to be looking at another potential long-term refinance operation, referred to as the LTRO, and at the point to where the ECB is already considering cutting interest rates. This still doesn't look good for the Eurozone. And still, there are a number of net shorts in the marketplace greater than those buying. Today, with the move up in the euro dollar, it triggered buy stops. Yet, some of those buy stops were stop loss levels for those short. So if all this buying, more or less, is related to stop loss orders on shorts being hit and then pushing up higher to another stop loss order level, it's a matter of time until the shorts are saying, okay, enough, let's step in again. The way I look at big moves like this is typically like a rubber band. The rubber band gets stretched. Well, based upon the laws of physics, and if you have a fairly new rubber band, it's going to snap back. So in my opinion, we're going to get a snap back here. Now, the market is settling a bit in the Traders Dynamic Index, but everything is up high. Look, the market baseline up over the 68, and the current price is selling about the 50. Now, I'm not suggesting that we're going to get a run all the way back down. We might, as a matter of fact, see a possible push up back above the R3 level before the day ends. We may even see the week to the upside. We may close on a high. However, if you look back at the fundamentals in the marketplace, nothing's really changed. So, long story short, how do I trade such a big move up knowing that eventually the market's going to go down? I have to consider first off that there is the potential to the upside. There are those today in the marketplace saying, I told you so, I told you the euro was too low, and I told you the euro was going to go back up. But fundamentally, in my opinion, they're standing on thin ice. it's going to fall back down. What I tend to do when I see big moves like this, I step back and take a look at a bird's eye view. If we take a look at the euro dollar on a daily chart, let's see what today's all about. This big move today basically takes out a whole week's worth of move and comes back up to a triple high point up here right around 23.20 area. Now currently where the market sits is at this low point. If this low point gives, then we'll see this move back down. So right now the market's sitting right about that 22.80, 22.90 area. Could we see a little bit more push back up? Yes, that's possible. We've seen a 1, 2, 3 move down right here. My thought is, let's run our fibs. From this high point to this low point, what type of retracement have we had? We've had a 38.2 retracement, pretty much right on the money. Could it go higher? Yes, we could see it potentially push up to 124 area where some traders have been looking for it to go to. So, long story short, when you see a big move like this and you catch the move up but you're looking for the fall back over and maybe you're thinking, well, you know, I saw a potential double top but yet it went higher on me and maybe it stopped me out and I'm still seeing it could potentially go up again. My thought is this: look at the big picture. Consider the fundamentals in the marketplace and think for a moment about that little rubber band. You stretch that rubber band, it's going to snap back. It's just a matter of time. Be cognizant of your money management. Trade with low leverage so that you can sustain any potential upward movement. In my opinion, the next move up above 23 here, you're going to start looking for those psychological levels. 23.25, 23.50, 23.75, and then 124, where there's a number of offers, corporate and institutional offers, sitting there at 124. Think about this too. Just a couple of days ago, the market was all talking about breaking 120 and going back down to the previous low seen at 1876. And now we get this flip in the marketplace. The market has a tendency during summertime, got low volume, tendency for the market to make these exaggerated moves. Give the market time to settle down a bit, let the profit taking finish itself off for those who held short, taking their profits on this move back up, and those who were close in being stopped out. The buying is getting halted as more sellers come in and get this opportunity to sell at a higher price. Well, folks, it's Dean Malone with CompositeFX. Just be aware that big moves like this often fall back. Simply draw out your fib retracements from the low to the high here. You can see it sitting right at the 23.6. I'd be looking for a fall back down. If it moves back up, be prepared for a double top pattern, and it could pin high, trigger some more buy stops before the fall back down. The bigger they are, the harder they fall, as my granddaddy used to say. So with that, folks, y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.